Equity market outlook, June 2026. Earnings have improved, but the risk of downgrades persists.
Q4 FY26 results show a meaningful improvement in revenue and earnings, before interest, taxes, depreciation, and amortization growth for BSE 500 companies, driven by metals, consumer durables, lending companies, operations and maintenance centers, and fast-moving consumer goods. However, these numbers factor in very limited impact of the West Asia crisis. Forward EPS growth expectations may look reasonable on paper, but with most tracked companies calling out input cost headwinds, earnings are likely to get downgraded as we progress through the year. West Asia crisis continues to be an overhang on earnings. The crisis is now well into its fourth month with no resolution in sight. India imports a bulk of its energy needs, and a prolonged war will weigh on economic growth. Input cost pass-through remains limited across sectors, creating margin pressure. El Nino and monetary policy reversal risks emerging. The meteorological department is anticipating a year of poor monsoons driven by El Nino, which could impact inflation, rural incomes, and consumption. The monetary easing cycle is at its end after large rate cuts over the past year. If inflation moves higher, interest rates may reverse course. A headwind for growth, domestic institutional investors inflows cushioning foreign portfolio investment (FPI) outflows. But cumulative foreign institutional investors selling remains elevated. Domestic institutional investors inflows continue to outpace FPI outflows. FPI interest in India remains a function of relative earnings per share growth compared to other EMs, currency stability, and global interest rates. On the global front, US S&P 500 and Morgan Stanley Capital International emerging markets continue to outperform Indian indices.
Investment takeaway. Despite near-term volatility from global factors, valuations are becoming attractive, and staggered equity allocation may be a prudent approach for long-term value.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.